The way he chooses stocks, the way he can explain things, and the way he makes money in challenging market conditions make Warren Buffett one of the finest investors we've ever seen. We're fortunate that he's still with us in 2023 so we can benefit from all of his market expertise. We'll cover 9 Warren Buffett investing suggestions for 2023. Your best investments are equities, therefore invest in them. In 2023, you may inquire what asset class to invest in. Let's examine the key asset classes' historical performance to address that question. These are real returns, adjusted for inflation. As we can see, the stock market greatly outperformed other assets over a 200-year period, outperforming bonds by a factor of 2 and gold by a factor of more than 6. The worst decision you could have made was to keep your money in cash because it would have declined over time and technically cost you money due to inflation. Because stocks are businesses and businesses' primary objective is to make you money. This is why Buffett loves stocks. Over time, equities are better than most other assets. Real estate is one asset class not represented in this graph. Crypto is another good investment that's not on this graph, but it's riskier. Please do your study before investing in crypto. Contrary to popular opinion, Warren Buffett has always invested in ways that are against the grain. Warren Buffett remained in Omaha while the majority of investors traveled to Wall Street to purchase stocks. The majority of investors sell their stocks when they realize a respectable return. But Buffett detests selling and prefers to hold onto his assets for the foreseeable future. Nonetheless, Buffett outperforms the market while the majority of investors lose money. It's a completely different way of thinking, but it's important to have a different way of thinking than the average investor because the average investor does very badly. When it comes to investing, it's probably a good sign you need to think independently if you frequently disagree with the crowd. Recognize the worth of your purchases. How applicable is it to the realm of investment to state that a fool is someone who knows the price of everything and the value of nothing? Every day, fools examine the prices at which stocks are sold to determine whether they have increased or decreased by 1 percentage point. Warren Buffett's followers, however, are much more obsessed with value than they are with price. If you are aware of a stock's genuine value, investing becomes much simpler. All you need to do is compare all of your available options and choose the one that is being offered for far less than it is actually worth. It's simply not as difficult to determine a stock's true value as people make it out to be. To put it simply, you need to purchase the stock, calculate the future cash flows, and then discount those amounts to the present. You won't need to worry about stock prices falling if you are aware of the value of the stocks you hold. Purchase equities even if they fall. Warren Buffett has become the face of value investing, and value investors have a very different mindset than other investors. When most investors notice that the market is declining, they panic and sell their investments. Because stocks are fractions of firms that you want to purchase as cheaply as possible, a true value investors enjoy seeing stock prices decline. According to Warren Buffett, be fearful when others are greedy, and greedy when others are fearful. Study the stocks he purchased in 2022 to understand how to buy in 2023. These purchases are the most recent ones, and they offer us an idea of what Buffett is seeking in these kinds of market situations. There were 3 big purchases made by Buffett last year. The oil giant Chevron makes up 5.72% of his portfolio and has a low PE and a good dividend. His second biggest purchase was Occidental Petroleum, another oil business with a low PE and a dividend that was worth 3.3% of his overall holdings. The third firm is Taiwan Semiconductors, which is the one you may kind of imagine Buffett wouldn't buy. Keep in mind that semiconductors are crucial parts of technology used in devices like computers, phones, healthcare, etc. Why is Buffett investing in Taiwan chips when he is well known for claiming that he can hardly operate his own phone, hardly understand technology, and only wants to invest in things that make sense to him? Initially, it may be Ted or Todd's investors buying the shares, but Buffett also understands consumer behavior. He is aware that even during hard economic times, people would continue to use their devices and will require a company like Taiwan Semiconductors to manufacture their phones, computers, and automobiles. Purchasing stocks that manufacture goods that are required by society, as Taiwan Semiconductor does, is a wise investment in the market we are in. This stock has a low P of 13 and offers a small dividend. You can always adopt that technique in 2023 if you spotted the pattern with these three firms, which is that they have low PEs and modest dividends. Interest rates. Warren Buffett is credited with the observation that interest rates are to asset prices what gravity is to an apple. The gravitational effect on asset prices is particularly weak when interest rates are low. Naturally, when interest rates are high, gravity is strong, and gravity pulls the apple downward. Who has been paying attention to the group that controls interest rates when interest rates are high and the stock market falls as a result? Jerome Powell is in charge of the Federal Reserve. He has been raising rates, which increased from practically 0% at the beginning of 2022 to 4.33% at the end of 2022. That is no significant rate increase, and in accordance with Buffett's philosophy, what it has done to stock value is caused them to decline as greater gravity is pulling on the prices of stocks. Prices are down primarily because of this, and Powell plans to keep rising rates in 2023. This might keep stock prices down, so we need to be ready for it. Fortunately, Buffett has shown us through the years how to deal with declining equities. Be cautious when investing borrowed funds. When it comes to purchasing a firm, Warren Buffett has compared it to a horse that lags and warned investors to be wary of companies with excessive debt. Too much debt performs admirably in bull markets, but is exposed in bear markets, like a horse that occasionally limps. This is why, before purchasing a stock, you should review its balance sheet. As an example, let's look at the stock of Alphabet. So visit Yahoo Finance, click the balance sheet link under Financials. We can see that their total debt is only $28.3 billion, and that they now have $139 billion in cash under current assets. You are aware that having cash on hand versus having debt is far more manageable. The stock of another company, let's call AT&T, is a limping horse since it has $150 billion in total debt and $2.4 billion in cash on hand. Purchase an excellent company. The poor ones will fall short in these circumstances. It's fair to say that the current economic climate is challenging. On the plus side, the poor enterprises are being forced out of business, which is a good thing. According to Warren Buffett, you only find out who has been swimming naked when the tide goes out. We don't need poor enterprises in the economy. Society wants them to cease operation. Yet, this is awful for everyone who opted to invest in these bad businesses. This is why it's crucial, especially in 2023, to support companies who produce high-quality goods that are actually required by society. These companies are extremely unlikely to be swimming naked and extremely unlikely to be made public during recessionary economic times. Buffett has been buying high-quality equities over the years, including Duracell, Coca-Cola, Apple, and Kraft Heinz. They're all excellent companies. Cathie Wood neglected to learn this rule, or perhaps she never did. Never lose money is the first rule. In 2020 and 2021, Cathie Wood was thriving as the stock market as a whole was rising. Everyone believed that innovation and high-growth tech stocks were making them wealthy when, in 2022, the economic began to struggle. Nevertheless, the stock market struggled even more, and those high-growth tech innovation firms also struggled. Don't lose money, be cautious, and don't overpay for equities. Warren Buffett has outperformed Cathie Wood by far during the past 5 years, up 56%, surpassing her. Rule number 2. It's easy, but remember rule number 1 first.